SVB, Bitcoin, and your IRA. Everyone, Adam Bergman here, tax attorney and founder of IRA Financial. And today's Adam Talks, you know I had to do it. Had to deal and address SVB, impact on cryptos, your IRA money. Just had to comment and opine on the started off as a mini banking crisis that almost led us to the edge of abyss. So just for the record, I am okay with what the Gov did. I'm not a big fan of bailouts, but I really, truly believe they had to do it. But what I'll do is kind of explain how we got here and talk about the resilience of Bitcoin, which has been, I think, one of the biggest surprises of this whole crisis is Bitcoin was pretty much left for dead. The higher interest rate environment really spooked many Bitcoin investors, FTX, and all the other crypto messes. And a lot of people just kind of moved away from cryptos. It was AI, everything was ChatGPT. No one even talked about Bitcoin anymore. And then, bam, SVB happened. Had a run on the bank, Silvergate, and bam, Credit Suisse, First Republic, Signature. And Bitcoin goes up to 25, 26,000 from under 20 in a week and a half. It's up through the core of the banking crisis, like 7-8%, outperforming gold and outperforming the S&P 500. So it's been super resilient, and we'll talk about retirement accounts, how safe are they, and what it means for retirement investors after SVB. So just a quick recap. You probably understand at this point what happened to SVB. I'm going to focus on SVB and not Signature or other crypto banks, and definitely not Credit Suisse, which has had problems for many, many years. This Credit Suisse thing is not new. The First Republic thing kind of is somewhat close, resonating with SVB. But let's focus on SVB. So what happened? SVB was a Silicone Valley Bank, really a Silicone Valley Bank. It was essentially marketed to startups and venture capital funds. And it was essentially an ecosystem for them. I actually didn't realize this. I started learning more about this a few weeks ago. Why? Because one of my good friends, my kid's best friend's mom, had money tied in there. And I was like, why? You live in Florida. Why do you get tied into SVB? And she's like, well, they forced us to use the bank. I raised money for my startup and we had no choice. They made us use the bank. The venture capital fund made us use the bank. And I never thought anything of it. It's the 16th largest bank in the United States, almost 200 billion in assets. Like, who cares, right? Who cares? It's safe. So bank, she had more than 250K in there, and her business would have failed. Honestly, if this bailout didn't happen, from what I heard, 40,000 plus businesses could have gone bankrupt. Many venture capital funds would have struggled, if not had to close shop, and millions of investors would have lost their money. So this was, basically a do or die type moment. And I think the Fed understood this and I think acted accordingly. They had that weekend to make a decision, and they did. They looked to find a buyer, they couldn't, and then I think they did what they had to and basically just guaranteed the positive over the 250. So I mentioned, just going back to what happened, it's an ecosystem for startups. Basically what they would do is they give you bank account, they give you a mortgage, and on top of that, if you, let's say, raise $10 million, they would lend you $5 million more on that 10 million and say, okay, keep the 5 million on the bank, but that would give you a bigger run rate with that 10 million. So you'd have more cash to kind of spend because you'd have that $5 million loan. And about 10% of their portfolio was these warrants that they would take in return for some of these loans. What also happened, not just SVB, but to every other bank, is higher interest rates, right? Interest rates went in a year, essentially doubled. And if you were on the wrong side of long-term treasuries, you were going to lose a lot of money. And that's what happened to SVB. And some folks think there's lots of other banks that are on the same bet. The only problem with SVB is somehow they kind of made long-term bets with interest rates. Some, I've heard 3 years, 10-year notes. And then when interest rates started escalating rapidly over the last year, their investments were underwater. And basically what happened is venture capital, since this is a very focused venture capital type bank, started drying up, right? Venture capital funds raised like 65% less money than the year before. They weren't funding new startups. A lot of new startups were having trouble raising more money. They were slowing their burn rate. Deposits were dwindling. This bank went from like 65 billion to 200 billion in 3 years. So venture capital, easy money was the catalyst for that. So all that happened, deposits shrinking, and now they need to come up with more cash for deposits. Problem is their investments are underwater. So they have to basically sell their investment at a $2 billion loan. They announced that to the market. At the same time, they're trying to raise funds with Goldman Sachs. And then individuals like Peter Thiel and some other venture capital folks are basically saying, pull your money out. And they had a $42 billion run in their bank in about 36 to 48 hours. And at that point, the regulators stepped in Friday morning, closed it up. And thankfully, by Sunday night, they announced that there's going to be a full guarantee before markets are open. So we're basically in a situation now is that, do we have FDIC insurance for 250K of deposits? I'm not sure. I honestly think if you're at a top 15 bank, you're probably guaranteed unlimited deposits, which is helpful. I'm not sure I'll bank on it, but I think regional banks are going to struggle. I think more and more small businesses, individuals who have more than 250K are going to spread their money out, or they're just going to leave a chunk of it at big banks, the top 10 banks, right? So IRA Financial, we have our omnibus at Capital One, which is the 8th largest bank in the United States. We also have multiple omnibuses, so we have the ability to spread out clients' money. So it's under 250,000 at various omnibuses. So that gives clients more comfort. The interesting thing with self-directed IRAs, and then I'll get to Bitcoin, is that most self-directed IRA clients just leave a small percentage of their assets in cash, right? They're using this vehicle to make alternative asset investments like real estate or gold or Bitcoin. So the cash is there not for 20 years, right? It could be there for a week, a month, 6 months, but it's generally moving in and moving out. So what some clients have done is they try to always stay in their 250. They'll have it spread it over different omnibuses. But for example, let's say you are wanting to do $1 million real estate deal. Some clients will, and this even happened pre-SVB. This happened over the last 10 years, that they would say, okay, we're going to move in 250, send it to the fund. We're going to move in our 250, and they'll just do that over a 4 or 5 day period to get to that $1 million. So they're always under the 250. Remember, if you're under 250, you have nothing to worry about, right? You're always going to be safe. So that is, what some clients have done. Others just feel safe. Obviously, Capital One's the 8th largest bank. If God forbid that something drastic happens there, like we're in bigger trouble than we know of. And now how's it tying to Bitcoin? So Bitcoin has been up over 7% this month. It's been resilient, as I mentioned. Investors which got spooked by FTX and other bad actors in the crypto space have turned to Bitcoin to say, okay, if I can't trust the bank, I want to diversify some of my cash outside of the US banking system. I'm going to buy cryptos and maybe even push it off an exchange or just hold it, but I want to diversify. And gold has also done remarkably well. It's up about 6% over the last month. But Bitcoin, considering where it came from, gold's been stable over the last year or so. It's pretty much been flat to up a little bit, or Bitcoin was down drastically prior to the SVB crisis. So all the gains for Bitcoin have been really since SVB happened, the last 2 weeks. Okay, if I was doing this podcast prior to SVB, Bitcoin would not be up 7% this month. So that's been the very interesting development in all this. IRA investors, there's really nothing to worry about. I think the US banking system is probably the safest it is now because of the fact that the Fed is so focused on it and essentially going to guarantee all our deposits. IRA investments are not guaranteed. I just want to be clear. If you buy Bitcoin or gold or real estate in your IRA, the Fed doesn't guarantee that. They guarantee your cash. Okay, so if you have more than 250K IRA Financial, like honestly, like I mentioned, I don't think FDIC insurance is capped at 250 anymore. I think that's gone for now. So you're good, but you can have us move it over different omnibuses. Like we're happy to do that. And you'll have the 250, per account because the omnibus is an REIN. So the way omnibus pass through FDIC Insurance as it passes through to each individual under our omnibus. So we have multiple omnibuses, so we can spread that 250 out, which is helpful to some investors. Others like me, I think this is the safest time right now to be a banker, bank deposits, because of the fact that if they bailed SVB out, they're bailing, First Republic, which is the 12th largest bank, heavy California real estate presence. We just saw now JP Morgan, Bank of America, some of the other players, infuse 30 billion in there. And the banks are working together to stabilize their finances. And really, it's the catalyst has been the quick increase in interest rates, which we haven't seen in 40 years, right? My lifetime, I don't remember, I wasn't working in the 80s. I don't remember a high interest rate environment. So this is unique to a lot of folks. And the fact that interest rates went up so fast, unfortunately, some of the banks that had investments in longer term, I don't want to say long term, longer term treasuries, got squeezed, and kind of that's what happened with SVB. They had a run on the bank and then less deposits than they expected, and the appetite really a process for destruction. So it's interesting. I think the Fed did what they did and needed to do to kind of stabilize things. I think there still could be a little bit of turmoil and turbulence, but I think I think we made it through the rough patches. Bitcoin's been resilient, and I think that ties into SVB. And from an IRA standpoint, obviously, it's important to protect our assets. The good thing is that IRA Financial and other self-directed custodians have omnibuses, which allow you to have pass-through FDIC insurance and can be spread over multiple accounts. I'm proud of our relationship with Capital One, 8th biggest bank, and I think that serves our clients very well. And then obviously, when you invest the funds, you're not having any type of FDIC insurance risk because the investment's allocated, whether it's equities, Bitcoin, gold, or real estate. So just wanted to touch on this crisis. I had to. First couple of days, I was scared. This was probably the third scariest point in my life, or fourth. I guess first was 9/11, which wasn't a financial thing, but that was just scary. 08 was scary. Then COVID, March 2020, that was super scary. And then I would put this up there as the fourth scariest. So hope you guys enjoyed today's podcast. Appreciate you spending some time with me today. And I look forward to chatting with you again next Wednesday. Take care and have an amazing day. Thanks.